We just have a quick question here from Pon Lung asking for any quick tips on how to read the Fed's dot plot. So thanks for the question. The good news is that it's actually really, really straightforward to do. Right here, we have the summary of economic projections. By the way, this summary of projections is released on a quarterly basis by the Fed. The prior one that we are looking at right now is the one from March 2021. And this will include the projections from the Fed about where they see the economy going. So it not only includes the dot plot, but it also includes where they see things like GDP going, where they see the employment going, where they see inflation projections going, etc. So any drastic changes in these numbers are usually also important for the markets, apart from the dot plot. But some might be more important than others, given or depending on what the Fed is focusing on at that time. So, for example, right now, there's a lot of focus on inflation, whether it's going to be transitory or not transitory, which means the updates to where the Fed sees inflation going this year and also next year will be very closely watched by the markets today. So it really does depend on where the focus is at that time. So moving on to the dot plot then, this is basically what it looks like. What is the dot plot? It's basically the Fed's way of giving the markets an advanced look at what Fed officials, where they think interest rates are going in the next couple of months and next couple of years, normally 2 years out. Now, there is a maximum of 19 members on the FOMC, including the 7 governors of the Fed board in Washington and then the 12 presidents of the regional banks. Right now, though, there's only 18 members who will contribute to the projections for this June 2021 meeting. So how you read this, very simple. Every one of these little dots that you see basically represents one of the FOMC members. Now, these dots are basically their forecast or their projections of the level of where they think the federal funds rate will be over the next couple of months, over the next couple of years. So looking at the March 2021 dot plot here, we have the years at the bottom, so 2021, 22, 23, and then the longer run estimates. Now, for many participants, the longer run estimates, it's pretty useless because it doesn't really tell you much apart from the obvious. Obviously, in the longer run, all the Fed officials think that rates will be higher, but how far that will be into the future, obviously no one knows. So that longer run estimate is pretty much useless for many members. But what we're focusing on obviously is the immediate term and where they think it's going in the more immediate future. Then on the right hand side, you have the actual level, the percentage level of where they think the federal funds rate will be. So looking at this March 2021 dot plot, we have what we can see is that we had 18 members, all members of the FOMC that voted, projected no change to interest rates for 2021. So that really shouldn't be a surprise, of course. All 18 dots of them think that the federal funds rate will remain at the lower bound level for 2021. Then taking a look at 2022, what we can see here is that there was actually 4 members voting or expecting a rate hike in 2022. Now, that's obviously going to be more of your hawkish members. We actually had 3 of them voting for 1 hike or expecting 1 hike, and we had 1 member actually expecting 2 hikes coming out for 2022. Then looking at 2023, now this is where a lot of focus is on for today's meeting, specifically for this June 2021 meeting. We can see that in the prior release for March, we had 7 members that projected 1, 2, 3, 4, 5, 6, 7 members that projected a rate hike in 2023. Or at least voted for higher rates in 2023, with all of them, of course, expecting a different level in terms of the amount of hikes. So for today's meeting, the question is whether we can see enough of these remaining 11 dots at the bottom, whether we can see enough of them shifting their projections to also price in a hike for 2023 or higher rates for 2023. To basically change the median. So when you have more members voting for a hike or higher rates compared to those that don't, that will raise the median expectation, which the markets is obviously focused on in today's session and every other session as well. So what's also important, maybe more interesting to note about the dot plot is that some Fed officials actually don't like the dot plot at all. We have Fed Chair Powell that's come out quite a couple of times previously saying that he doesn't really like it because he doesn't think that the dot plot really gives those that fixate on it so much, the bigger picture of what the Fed is actually trying to say. But nonetheless, what Fed Chair Powell thinks about it and what other Fed officials think about it isn't as important for us as what the markets think about it. And the markets generally scrutinize that dot plot for signals on where they see rates going, or where they see the Fed seeing rates going in the future, which is arguably the more important thing that we want to be focused on. So hope that helps with the question. Ponlung, any others, please don't hesitate to let us know.